Hey guys, this is Chris, and today I'm going to be taking you through my process, my pre-market plan, how I journal every single one of my trades, how you could copy exactly what I'm doing so that you become a better trader. You see, the issue I'm seeing against many traders is that they're not allocating their time properly. They spend hours on the charts, they spend hours executing, looking for trades, but they might have a system. They're not getting any better if they're not tracking that system, if they're not fully understanding their system. You have to build this confidence where you're not afraid to take a loss. You're not afraid to go in a little bit of drawdown because you're so confident in your system. Now imagine this, you're spending years of your life trying to learn this trading thing, and it might not work out right away. But one of the biggest deterrents, one of the biggest things that are not going to help you is if you're just coming every day to execute and you're not actually tracking anything. One of the biggest things that's going to help you is having a consistent process and having a consistent system. You can't be jumping around from EMAs, VWAP, supply and demand, fair value gaps. You have to choose one. That's the truth. You guys can't just it's okay to combine things. It's okay to create your own system, but you can't just keep hopping and hopping and hopping. You have to at some point sit down and start learning from your system, even if it gets boring. How badly do you want it? You're going against some of the hardest firms, some of the most capitalized firms in the world, spending billions of dollars, and you think that you're going to beat them with just getting on the charts, just clicking a few buttons. You're not doing enough. Chances are you're just allocating your time improperly, because a lot of you guys will get on the charts and spend 1, 2, 3 hours. The reality is you probably need less than an hour on the charts, like me. Okay, you're gonna track the trade that you take. You're gonna get better from that. You're gonna make notes on your psychology, what mistakes you're making, how you can get better. You're gonna see common tendencies and price action, and you're gonna get better every single day. But it's not gonna take a year. It might take a few years. It might take 5 years. But you're doing yourself a disservice if you're not tracking anything, if you're not putting in true effort. Now we're going to go into our pre-market plan that we made just last night. So today, it's Tuesday, we had a red folder. We had already moved quite a bit on price, so I mentioned we're looking for signs of volatility because we moved a lot already. Volatility to me means fair value gaps, means big sharp moves, which is what we ended up having. Had we not had that, then I would have most likely not took a trade. I was looking for gold and NQ longs, and look what happened. You guys will see that I took just that. Stick to the plan. I'm working on a bunch of Apex accounts, so I just mentioned like my daily drawdown. Max 2 trades per day. Most of the time I'm only taking one. Today we took two. And then I just reassured myself that yesterday was a win. The reason why it was a win is we took no trades. We recognized that there was no good opportunities and we knew not to take a trade. Now that was our pre-market process. Let's go into the trades and how I journal. So right here, we're looking at gold. And if you guys have seen my previous videos, you will know that I have a 3-step process. First, it's figuring out where our draw is, delivery, and then we have our execution. So our draw was going to be these highs. All of this was sent out inside of the Telegram. If you guys missed it right here, looking at some of these highs, in terms of what kind of delivery we had, going down to the 5-minute time frame, this was the 30-minute. Just took out some of this liquidity. Going down to the 5-minute, I saw in this opening range that we had a fair value gap. We're coming up on some of our highs up here, and so I wanted to find an entry. Sure enough, we found the 5-minute fair value gap entered right here. So I know with gold, it could have these large swings. So price doesn't move as cleanly on gold as NQ, so you have to have a wider stop loss. So sure enough, I have 2 fair value gaps that are covering my position, and we ended up seeing very slow price action. The 5-minute obviously expanded very quick. Then it came back and it just consolidated. At this point, I was already break even. But anyways, price came up. I ended up taking profit right around here, about a 1 to 2. Nice little trade. There was more volatility that came later on. But again, we have this consistent process. We're just trying to take base hits, and those are going to compound over time. What does this look like on my journal? First thing that I noted, the first thing that I'm always going to note is the higher time frame. we're going to look at what is price drawing up to, because at the end of the day, anyone could take a lower time frame execution, but can you really build context and build these high probability setups? We're on a 5-0 win streak, guys. The only reason that has happened is because we have a consistent process. Okay, so looking at the hourly, again, we had those highs, so I'm going to note that down. And then we had our execution. So here's our rating. This is a A setup, in my opinion, on gold. We swept out the London lows. That was our delivery, that was our delivery. And then we have our targets, which was the daily highs above. We're going to have the upper 5-minute fair value gap, good momentum. Something that, looking back, I might have been a little better at is having a better entry. So my entry could have been deeper down here. It didn't even have to be on the second fair value gap, but maybe even like the midway point of the 5-minute fair value gap. Just something to increase my RR a little bit better. So looking back, and again, I'm always learning, guys. This is why you have to be journaling, because I know next time I go into that trade, I'm going to have better RR. Coming down, this was the trade that we took on ES. So looking at the hourly, we had some daily highs up here. We had a lot of daily highs. And when it came to NQ, we had already hit those highs. But I know when we have nearby daily highs, they're going to hit no matter what. It's like a 80-90% chance that it's going to happen. It's very high. And I just mentioned that, hey, like, we're already in overbought territory. We're already in a deep premium, but the chances that we hit these highs are very probable. So coming down to the 1-minute time frame, we had this fair value gap. And now this is where intuition kind of came in. So anyone could enter on this fair value gap, right? Everybody knows about a fair value gap, very simple. But what I was looking at is, how is price moving relative to the other indices? You don't want to see price moving sideways like this for a very long time. Like, this isn't what you want to see. But because I saw YM moving with momentum, because I saw NQ starting to move up also, I knew that right here was a perfect time to enter. I'm not going to get left in the dust. I'm going to catch this trade. So sure enough, price starts coming up. We get one more little retracement, and then we went to break even. Hit those highs with momentum. And again, it was a long range day. I don't really care. I don't care that we just caught this move, because again, like, between these two moves, it was nearly a 5 RR day. That's absolutely amazing. We can make so much money doing that. Coming down to the journal right here, this was an overall B setup. Let me tell you why. We had no proper delivery. Normally, I like to see some type of higher time frame context. So again, this one, we had like the hourly traded down into the fair value gap, and then we took out the London and Asia lows. That's perfect. That's what you want to see before a move happens. We were so deep into this premium that there was no higher time frame. All we knew was that we were going to attract to these highs. So really, there's nothing that price was pushing off of except for the 1-minute fair value gap. But again, we had enough context with those other indices building momentum where we knew price was going to move. So no proper delivery, clear daily highs as draw, 1-minute fair value gap. We had a slow PA right here when we entered, right? But it's not all bad, because prior to this, we had a huge expansion. And that's what you want to see. There's still volatility there. There's still volatility left. Mistakes, none. Timed this trade perfectly with YM's momentum, leading to less overall exposure. So again, had we entered right away, there was a higher chance that price could potentially come lower, but we entered when it was slightly higher probable. And the way that I managed my risk today on this trade is I used slightly less size. Knowing that it was only a B setup, I just took this small base hit. It's still going to greatly increase my value on my account. But when we have those higher A+ setups, that's when I'm going to go higher size, and we're going to have huge wins. Again, guys, this is all going to be covered inside of the Telegram. This was the signal, the draw up here. Then we had the entry. We went break even at 638 as we started building momentum, and then we exited fully. Killer trades today. Now, I just want to leave you guys with one final message before I go. And this message comes from one of the best artists of our generation. If you guys don't like him, I mean, he still has the best numbers. There's no debating it. He said that you can never get too high or too low. What that means is when you take a win, when you're doing well in trading, you shouldn't be celebrating it. You shouldn't be getting overly excited. This is a business, and at the end of the day, you have to take it seriously. You never know when you're going to have that next win. So you shouldn't get overly excited because that's just going to lead to overconfidence, taking unnecessary trades. You have to be reasonable. You have to think logically. Now, the second thing is not getting too low. What that means is when you take a loss, it's part of business. It's a business expense at the end of the day. You're going to have this profit curve. It's going to go like this, right? Every time you have a dip in your equity curve, all that means is you took a little expense. In order for you to have more profit, you have to have another expense. In order for you to have more profit, you have to have another expense. And it's just so on and so forth. And you have to have this consistent process. Like you saw me, I mentioned that I'm only taking 2 trades per day at most. My equity curve can't go too low, especially if I'm having proper risk management. If I take 2 losses, I'm not going to get hit that hard. Whereas my winning days are very big. I get pretty excited inside of the live, but at the end of the day, I let that all go once I step away from my charts. I go and live life because you never know the outcome of your next trade. You have to not let your previous trades affect the next one.